Nvidia has long been seen as the poster child for artificial intelligence. Wall Street's seeing it as a pulse check on the health of the AI ecosystem. However, there is more to the AI trade, of course, that investors may be overlooking. DVX Ventures CEO John McNeil is joining us now with a closer look. And in addition to being in venture capital, John, you all helped co-found an ETF that helps also look for these opportunities. So I guess, Nvidia has obviously dominated this trade along with a handful of other names. Before I ask you for specifics, I'm curious sort of how you're framing it when you're looking for these opportunities. What criteria are you using? What growth areas within AI are you looking at?
Yeah, during my time at Tesla and Lyft and other stops in my career, I had some responsibility for building data centers. And so what we did was we took the build sheet of a data center, an AI data center, which is actually quite different than your regular data center. It's got a lot more fiber, a lot more power, obviously. And we took that build sheet and said, if you were going to build a stock portfolio out of this, what would it look like? And it turns out that Nvidia is a super small minority of what gets put into an AI data center. And so we wanted to give investors access to what the real AI infrastructure profit pool is. And that includes everything from the power generation to the power electronics, to the cooling, to the substrates, to the networking software that has all these chips talking to each other, et cetera. And so that's really how we formulated this ETF called AIS.
And walk me through that product, John. What are some of the names in that vehicle, in that product?
Well, you can imagine, just start from the power source. You've got GE Vernova and others who are providing the gas turbines that are powering these data centers. As you know, the utilities and the grid can't respond fast enough to demand. And so these large AI data centers are finding their own sources of power, and they're putting that power in quickly, and that's in the form of natural gas turbines. Then that connects to power electronics that transform that electricity so that the data center can use it. Those are provided by companies like ABB. And then you come inside the data center, and the data center, an AI data center, has 4 times the fiber that a normal data center does. And Corning is a name that is really benefiting off of all that fiber. And then you've got network providers, substrate providers. We have a list of about 60 stocks in the AIS ETF that contribute to that build of an AI data center and the profit pools that are within that.
And I'm curious, when you're thinking about your private investments as well, if you're applying some of the same criteria, if you're thinking about it in the same way.
Yeah, we tend to think about it in a holistic way and start to look at places that people don't often look at first. And as you mentioned, Nvidia gets a lot of the headlines here, as does Marvell and some of the other chip suppliers. But when you open the aperture and say, okay, what really is involved in this super cycle of AI and the build out of the infrastructure around AI, then it really broadens to a whole different series of stocks that investors can participate in and participate in the super cycle. And as we've seen through the last couple of weeks of earnings, the large hyperscalers, Microsoft, Amazon, Oracle, et cetera, are all confirming their previously announced AI infrastructure investments. So if anything, this is not slowing down, and the long-term commitments remain. As the market is shifting to more and more demand and inference, as Jensen Huang referenced this week in his earnings.
John, I want to switch gears here a little bit because you are the former Tesla president, and Tesla is certainly in the news. Robotaxi's on the way, John, as you know, in Texas, coming up here shortly. I'm just curious, John, as you think about Tesla's advantages in that market, how would you think about that? How would you frame that as it goes head-to-head with Waymo, which, of course, right now is far ahead?
Yeah, Waymo's got has 10 million rides now under their belt. They're the market leader. Tesla's going to launch with what Elon describes as around 10 cars in a limited street map in Austin, which I applaud. That's the right way to start. Start with safety first and make sure that the passenger's safe is the primary objective. But To your question on what advantages they have, Tesla's got a lot of cars on the road. They've got millions of cars in the car park. They're gathering a ton of data. And additionally, Elon's got one of the biggest GPU clusters in AI. He's got a 100,000 GPU cluster AI data center outside of Memphis. He mentioned last week that they're now trying to build a million GPU cluster gigawatt AI data center. And so that data is flowing into some of the most powerful compute in the world. And so that's a real series of advantages Tesla has. But as the head of autonomy at Tesla described last week publicly, he feels like they're a couple of years behind Google Waymo. And that's probably right. They've got some real ground to catch up because it's much different running driver assistance software than it is running a driverless car.
Well, and I'm also curious where you come out on the whole sensors versus cameras argument, the kind of technologies that each company is employing, because all the data in the world is great, but you have a piece of hardware that it has to power, and that has to be safe. So do you have any thoughts on that?
Yeah, I'll kind of give you both sides of the argument. The one side of the argument, and this has been Elon's mantra, is that humans drive cars with two eyes. And so a car with 8 eyes is going to do better with full-time attention on the road. That's really the Tesla position. On the other hand, there are reasons why the others, Waymo and the leading Chinese autonomous companies, have applied both radar and LiDAR in addition to cameras. And that's because our eyes can't see well through glare. Our eyes don't see through the dark. Our eyes don't see around corners, and our eyes don't see well around weather. And cameras have that same challenge. They don't see well through glare, through weather, through the dark, around corners. LiDAR and radar do. And so from a safety perspective, there's the argument to be made that you really do need those extra sensors if you're going to be a lot better than the human eye and responsibly address those weaknesses just in vision versus some of the other sensors. Now, the argument that Elon makes to counter that is, hey, for every sensor set that I add, I now add delay in decision making, because there are often times where the LiDAR sensor doesn't agree with what the cameras are saying. And so then the computer has to decide, okay, which one's right and which am I going to follow? And I need to make this decision like super fast to avoid a potential obstacle. And so his argument is much faster compute, much lower energy cost. We ought to be able to do this with eyes. The others argue you can't do it with just eyes because cameras have the same failings as human eyes.
Finally, John, there's a lot to ask you about because, listen, venture investor, former Tesla president, GM board member. One final point I did want your take on, John. I'm just curious to get this. If the EV tax credit does get axed, John, in your opinion, that would mean what for the broader EV market? What could be some of the ramifications, the ripple effects?
It's a good question. I think the answer is kind of clear in data. When you look at markets around the world where the EV tax credits have been pulled off, demand falls between 20 and 30%. So you're talking about a 20 or 30% drop in consumer demand. Now, granted, that is in times where the price difference between an EV and a gas car has been greater than it is today. Today, we're approaching parity. But I think a lot of folks are concerned that we may be ceding the EV market to China. BYD, the EV producer out of China, is the largest and fastest growing car manufacturer and supplier in Europe, in South America, in Asia. And there's a real concern that the U.S. automakers may get left behind due to this policy, due to these policy decisions, because China is moving so fast in the rest of the world. And it's no secret that their EV manufacturers are heavily subsidized.
John, really, really fascinating perspective. We really appreciate your time today.
Nice to talk to you.